But why don't we go back to where do we stay right now? What does that mean for 2025, and where are we going from there?
So far in 2025, what we see is a continuation of what we had in 2024. Now, we have to be careful here, Sylvain. So what we don't want to do is extrapolate the returns that we had last year to say, wow, we should just expect another 20% return out of US equities this year. It doesn't work that way. It's a combination of valuation and earnings growth. And so by earnings growth, we mean profits. How much are corporate profits going to grow year over year? And here, we have a positive outlook. Not only our indicators, but what we're hearing from analysts out there is setting the expectation for profit growth that's going to be in the 10 to 12% range for US companies, Canadian companies as well. And so when you look at that, you go, okay, so that's our starting point. We should see gains in the market, like positive gains in the market because profits are growing. The offset to that is valuation. And valuation, we can measure it in a number of different ways, but let's put it this way. Last year in 2024, a lot of the gains that we saw in the market were because prices were just going up and it wasn't necessarily earnings driven. Corporate profits were up about 7%, and yet the S&P 500 was up 23. Well, how do you get 23 out of 7? Well, the difference is just the valuation in stocks going up. So usually when you see a year like we think we're going into in 2025, when profits now are going to be in the double digits, you tend to see valuation come down. So our expectation is that, while we do see a good environment for profit growth, the total return on stocks is probably going to be somewhat less than that, closer to average, which is in that 8 to 9% range. So we think that mid to upper single digits for US equities is realistic. Canada, I think, can actually do a little bit better because we're cheaper than the US and we have some upside catalysts with the banks, energy, materials that could see a more positive year. In part, and we can get into a little bit later, in part because of the AI boom that's going on, not only in the United States, but globally.
It's interesting, and part of like it's not always like what's the best is more like from a starting point where the valuation is. Correct?
That's exactly it.
Okay. Listen, I would love to keep going. I know I can't keep you live online all the time. You probably have, probably, I don't know if we're going to see you on BNN or Business News or CBC later on today, but Philip Petursson, from the Chief Investment Strategist at IG Wealth Management, is one of the top media personalities in Canada in the business community. So we very, very much appreciate your time this morning, Philip. And I would be remiss not to mention the podcast available on our website, are available through the IG website, The Living Market. And where do we stand with the podcast? Do you want to give a quick shout out to the podcast there, Philip?
Absolutely, and thank you for that. It's a great way of staying in touch or on top of what we're thinking. And every single week we come out with a new topic. It's a 5-minute podcast, right? So it doesn't require a big time commitment. You don't have to sit down and listen for 45 minutes. It's 5 minutes on what we think is relevant or interesting in the markets today. And we've been doing this for a couple of years now. We're over 100 episodes on it. It's something that we put a lot of work into. The feedback has been very, very positive. It's a nice, easy way to stay connected to how we and the other portfolio managers that we work with are thinking.
Once again, our host, Philip Petursson, Chief Investment Strategist at IG Wealth Management. Philip and I go way back. I very, very appreciate our conversation that we have all the time and in conferences and above. But I certainly appreciate you taking the time to speak to our clients today. Thank you very much.
Thank you, Sylvain. Appreciate you having me on.
Thank you very much. And we'll log off, everybody. And if you have any questions or comments following that, please feel free to reach out to us and just send us an email, and we'll go from there. Thank you, and have yourself a great day. Thanks, everyone.